In macroeconomic statistics, two types of other economic flows can lead to changes in the values of assets and liabilities in the balance sheet, and thus also changes in net worth. Let's take a closer look at these two types, revaluations and other volume changes. We will start with the latter. We record in the other changes in volume account all the flows that are neither transactions nor revaluations. The net effect of all the entries recorded in this account is called change in net worth due to other changes in the volume of assets and liabilities. The first example are events relating to the appearance or disappearance of assets, including the following: the economic recognition of produced assets, such as public monuments and valuables, in the balance sheet; natural resources entering to or exiting from the asset boundary, such as discoveries or extractions and upward or downward appraisals of subsoil resources; and natural growth or harvesting of non-cultivated biological resources, for example, natural forests and fish stocks. A creditor may determine that a financial claim can no longer be collected because of, for example, the debtor's bankruptcy. If so, the creditor writes off the financial claim from its balance sheet. As an aside, it is important that we do not confuse debt write-offs by the creditor with debt cancellations and forgiveness, which are transactions because they are mutual agreements between the debtor and the creditor. Exceptional and unexpected external events are also recorded in the other changes in volume account. Among other things, such events can take the form of removal of assets from the balance sheet as a result of catastrophic losses. These are partial or complete destruction of a significant number of assets from a large-scale, discrete, and recognizable event, such as a natural disaster. The uncompensated seizure of assets, for example, where a government unit takes possession of assets of another institutional unit without full compensation for reasons other than to pay taxes, fines, or similar penalties. We record several changes in classifications as other volume changes. For example, changes in the classification of an institutional unit, changes in the structure of institutional units, or changes in the classification of assets and liabilities. Let's now turn to holding gains and losses, or revaluations. This is the second type of other economic flows in macroeconomic statistics that can lead to changes in the values of assets and liabilities in the balance sheet, and thus changes in net worth. Other than transactions and other volume changes, revaluations result from price changes. They can accrue to almost all assets and liabilities held for the full reporting period or only part of it. Revaluations exclude changes in the value of an asset resulting from a change in the quantity or quality of the assets. Those changes are recorded as transactions or other volume changes. All revaluations are recorded in the revaluations account. Therefore, both realized and unrealized holding gains and losses should be captured. To complete the balance sheet equation, we should record nominal holding gains and losses. The opening balance sheet value plus transactions plus revaluations plus other volume changes equals the closing balance sheet value. In addition, for some macroeconomic statistics, we also calculate neutral and real holding gains and losses. A nominal holding loss reduces an institutional unit's net worth, and a holding gain increases a unit's net worth. To calculate holding gains and losses for all assets and liabilities precisely, we cannot only use balance sheet data. This is because the stock positions in the balance sheets do not reflect each of the economic events that may have occurred during a reporting period. We would need a lot of additional information and data which are usually not readily available. So a commonly used alternative method to estimate revaluations is based on the equation that the opening balance sheet value plus transactions plus revaluations plus other volume changes equals the closing balance sheet value. We can therefore say that revaluations, or holding gains and losses, equal the closing balance sheet value minus the opening balance sheet value minus transactions minus other volume changes. Please note that this alternative method will only produce the desired results if the assets and liabilities in the opening and closing balance sheets have been valued at their appropriate current market values, and all flows other than revaluations have been captured. It is also crucial to carefully evaluate these estimated values for revaluations to see if they make economic sense. In summary, two types of economic flows other than transactions are distinguished: revaluations and other changes in the volume of assets and liabilities. Revaluations are changes in the prices of assets and liabilities. Normally, we estimate revaluations as the residual of the changes in stock positions, other volume changes, and transactions during a period. Other volume changes are flows that are neither transactions nor price changes.